going higher in the wrong direction, that story could start to be changing and could be bringing a lot of the optimism news that's sweeping through the markets today.
Charlie, thank you very much. Yeah, that relationship between rates and banks has been complicated in the month of March. Charlie Wells with the latest on some of those stocks that are moving. As we were just hearing from Charlie, coming up, are there blue skies ahead? Airlines take off on the ceasefire between the US and Iran. We hear from the head of the airline industry's global trade body and discuss the impact on aviation. Next, this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deal.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
We hopefully will see some flow of oil return, which will be a positive. So the airline industry has been impacted by both the supply of crude, but more importantly, the supply of the refined product, because a lot of jet kerosene was refined in the region, and that obviously is dependent on reopening the straits as well.
That is, of course, the IATA Director General, and we should note, incoming Indigo CEO Willie Walsh reacting to the news of the two-week ceasefire between the United States and Iran. Airlines, of course, consume an awful lot of fuel. They are highly exposed to what happens with the fuel price, with the jet price. And unsurprisingly, this morning, what we are seeing is a very big bounce in some of the European names. So IAG, Air France, Lufthansa, all bouncing strongly from here. Let's talk a little bit kind of what happens next. And I think that probably is the question a lot of airline CEOs are going to be asking themselves right now. Let's join Bloomberg's Global Aviation Managing Editor, Benedict Camel, who joins us from Berlin. Good morning. It is unsurprising to see the airlines bouncing back this morning. They are going to like a cheaper jet fuel price, but are they going to get a cheaper jet fuel price?
Well, they probably will. The question is whether consumers will also get cheaper tickets. What you have seen is a reaction on the price side. As far as the consumer is concerned, you've seen these fuel surcharges. You've seen extra cost on baggage. We only had yesterday Delta announcing that. And that's probably something that will remain in the market for the foreseeable future. We just heard from Willie Walsh there. We've heard from other airline executives saying, not so fast. Yes, this is good news. But you can't just sort of swing the pendulum back via a single tweet, as it were. So this will take time to find its way and work its way back through the system. Once companies have gotten used to higher prices, and remember, the demand is there. There's still strong demand out there. The bookings are strong. Locked in these higher prices, and you see people still buying the tickets, it'll be hard for companies to sort of pare them back. So I would wager that over the next couple of weeks, you will still see these higher prices. We head into the peak summer travel season.
And what for the operators in the Middle East then, Benny, because they really have reshaped the long-haul industry in recent decades, Qatar Airways, Emirates and the like. I mean, what are we expecting? How quickly are we expecting them to return to full force?
Again, it won't happen overnight. If you look at the last 5 weeks since the war started, they really pared back operations almost to zero and have slowly started coming back up. But remember, a lot of these aircraft remain grounded. Qatar Airways has quite a few aircraft sort of out of position. They've stored them in places like Spain. They have to bring them back. They have to bring crews back. And importantly, they have to bring back the story, the demand picture that people still want to travel through this part of the world. Do they want to be stuck there again? There is that concern. So that'll take time to get people back, to rebuild the reputation, as it were, of these airlines. One way to do that, speaking of prices, will be via lower fares. So if you're looking for low fares, that's probably the place to go. Emirates, Qatar, Etihad, they will all try and bring back demand through lower fares, but Lufthansa and Air France and so on, they've also not sat still. So they have pushed more capacity into the market, into routes like Asia and so on. So sort of unwinding all of these sort of changes, that's going to take a while, probably into the summer and if not beyond.
Benny, for a while it looked like maybe the US carriers were going to have an advantage. They would have access, availability when it came to fuel, to jet, and that was going to potentially work in their favour. Does that go away now? And what message do you think Ed Bastian delivers today when Delta kicks off its earnings?
Yeah, so as you said, Delta will have their earnings today, midday, and it'll be interesting sort of how bold the company might be in terms of its prediction. Will they issue a proper forecast? Might they refrain from one? That's something we'll be looking out for. A couple of weeks ago, a lot of the airline executives came together in Washington, D.C. for a big conference, and the mood was really quite jubilant. The demand was there. The people were booking. Some of it might have been sort of booking quickly now before fares rise. That's the big question, whether people will still rush to buy these tickets now. And you know, as I said, the demand still is there, but it's an advantage that the US airlines have had for a while that might go away fairly quickly.
Benny, thank you very much. Bloomberg's Global Aviation Managing Editor, bringing us those global airline stories. Benedict Camel, thank you for joining us. 8:22 in London. Back to the broader market story, and airlines are part of that, of course. Airlines doing really well. Elsewhere, we see European equity markets really on the front foot, up by 4.9%. The CAC 40 up 4.2%. The Xetra DAX getting the best of those gains, up by just shy of 5%. Let's bring into the conversation Bloomberg senior strategist Neil Campling, who has been taking the pulse of the markets this morning. They seem to be very much alive and well, Neil, in fine form. So what are traders saying? The DAX just 5% higher this morning. What are traders saying? What are you hearing?
First thing, obviously, clearly a relief rally. The move that we've seen in the markets this morning, we've only seen these kind of moves above 5% for the stocks on 4 previous occasions in the last decade. 3 of those were during COVID, and another was during the Ukraine-Russia war in 2022. So the first thing is, one investor said to me this morning that in the short term, this market remains untradeable. A second basically mentioned that what we've seen in terms of hedge funds is a massive degrossing of their exposures. If we think about what happens in degrossing, that is when a lot of the time the risk managers take control of those books and reduce the leverage in those books. Are they suddenly going to regross, if you like? Are they going to suddenly increase those exposures? I think that's unlikely. This is a pause. This is not an end to the troubles in the Middle East as we see it. If the choke point has been over the Strait of Hormuz, Iran basically has that under control. Will Israel remain the ceasefire? So many of these questions are being asked today. Now, the trend followers, the CTA funds, which are very much momentum-based, but we're hearing from traders this morning that they were effectively long energy and short equities. So you're going to see certainly a bounce based on a reversal of that short-term effect. Then on the other hand, if you talk about momentum and with them being so quick and moving around so quickly, the other thing to remember is that, to quote a classic phrase, that momentum often is following of sheep, And to quote Gordon Gekko, from that film, of course, sheep get slaughtered. So be careful in terms of trying to follow these short-term moves.
As the CTAs come back in and reverse some of those positions, but are there levels I need to think about? Are there levels I need to watch out for that will push them even further, that will drive this rally on?
Yes, we had some data that came through this morning from some of these chats with traders talking about Goldman saying that these CTA funds at above 6740 on the S&P and above sort of 6800 will see a sort of 50 billion of equity demand to buy, push up potentially to 200. So that's a 4x increase to follow that trend in the short term. So at the index level, you may well see sort of the macro funds, etc., buying, but underlying, what have we seen in the last couple of weeks? Certainly for MSCI World Index, we've been trending at below average volumes. So that suggests that active managers, real sort of the money managers, aren't deploying capital at the moment. And I think until we get a longer term solution scenario, and we're coming into earnings season to see whether we're yet going to see impact in terms of outlooks, remains to be seen, to be fair.
Thanks, Neil. Thanks for the update. Really appreciate it. Bloomberg Senior Strategist Neil Campling, figuring out what's going on this morning and how far we go. What are we going to talk about next? We'll get back to the fundamentals in some ways, try and understand what is happening on the ground. Sanam Vakil from Chatham House is going to be joining us next. Is this situation sustainable? What's the situation after look like? What does the Strait of Hormuz look like after? What does Iran look like? All of that coming up next. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job. Bro, like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is the opening trade, 30 minutes into a session, and what an incredible Wednesday session this is turning out to be then. European equity markets firmly on the front foot, up by just shy of 3.9%. The Xetra DAX getting the best of the gains. It was over 5% higher, up by 5.2% a moment ago, just pairing those gains a little bit. As Guy, you were saying earlier on, one of the more energy-intensive indexes doing well on the back of those steeply lower oil prices, and that really is the underlying driver of everything this morning. The FTSE 100, energy intensive in a different way. A lot of energy companies listed there, and that is one of the sectors, in fact the only sector when I last looked, in negative territory, and so that market is up, but only by 2.4%. The CAC 40 making that other nice point this morning, that it isn't just those sort of first-order sectors affected by lower energy prices that are getting a boost today. It's technology, consumer products, that includes luxury. Guy, what are you seeing?
Let's take a look at these numbers. These are, you're not going to see this very often, okay? So let's just kind of work our way through what we're seeing on the screens on our Bloomberg this morning. 532 stocks are up in the Stock 600. Only 67 are down. Anna's just mentioned some of the names that are certainly going to be at the top of that list, the energy names. I'll show you those in just a moment. Check out the volume. You don't often see volume days like today. In fact, they come along very, very few and far between. We're at 160% up on the average volume that we've seen over the last 20 days. Now, the last 20 days obviously includes obviously the bulk of what we've been seeing in terms of the conflict in the Middle East, but you don't often see a volume day like that. So there's a big repositioning happening, big rotation happening. That's driving the volume. Antofagasta, ASML, HSBC are up, so the miners are tracking higher, unsurprisingly. They are energy intensive, and you're going to see maybe a return kind of to normal flows in the global economy. Technology's doing well as well. That's interesting as a trade. You've certainly seen that coming out of Asia. ASML is up by 7.63%. What we were watching for this morning was whether or not the banks were going to react. Now, HSBC is a slightly different picture, but nevertheless, let's kind of extend that theory. An idea. Let's call it 7%. BP's down by 8%. Do they come lower from here? Probably. That would seem to be a logical conclusion. Therefore, what we're seeing today is AP Møller Mærsk down by 2.1%, Anna.
Let's get an update, Guy, on some of the other news flow that we're covering this morning. Moody's has cut the outlook on credit giant Blue Owl Capital to negative. The rating firm moved the outlook on Blue Owl Credit Income Core from stable after, quote, significantly higher than peer redemption requests in the first quarter. Macro hedge funds struggled in the month of March as the war in the Middle East upended inflation expectations, leading to steep losses at many of the industry's largest firms. Sources say Saeed Haidar's Jupiter fund lost about 12% in the month of March, and Bloomberg understands the Brevin Howard Master Fund fell 6.6% for the worst monthly loss in its 2-decade-plus history. And ship owners are working to understand the fine print of a US-Iran ceasefire that could temporarily unblock the Strait of Hormuz and open an exit for more than 800 vessels trapped in the Persian Gulf. President Trump earlier said the US will be, quote, helping with the traffic build-up in the Strait of Hormuz. The ceasefire buys time for the US and Iran to potentially reach a longer agreement to end the 6-week war. Let's get to Bloomberg's Jumana Basechi with that in mind. She is in Dubai for us. And Jumana, the ceasefire holding, what do we know about the durability of this ceasefire?
Yeah, well, it was a bit hit and miss in the early hours of the morning. I will say that even after the ceasefire was announced, we still saw a barrage of incoming projectiles being directed at various countries in the Gulf, including Israel as well. So that has subsided. And I think now there's a combination of feelings in the region. Number one, relief that we've averted the very worst case scenario. And of course, President Trump's announcement vis-a-vis the ceasefire came about 90 minutes before that deadline, in which he had threatened to unleash destruction on Iran's infrastructure. So a relief that that outcome was avoided. But at the same time, perhaps a little bit of skepticism about the durability of the ceasefire and whether it can actually translate into something more permanent. Now, overnight, the Iranian National Supreme Council put forward their list of terms of what they would like to see in order for this to turn into a longer-term cessation of hostilities. And there's still very maximalist demands. And one of them is essentially maintaining control, maintaining sovereignty over who passes through the Strait of Hormuz. And this is clearly a non-starter for many nations and Gulf nations in the region. Other maximalist demands include the U.S. removing their sites, their bases from the region, war reparations, assurances that the war won't happen again, and another one including that all operations on their proxies in the region need to stop as well. So many of these demands are unacceptable, and indeed we've heard from the Israeli Prime Minister this morning, and he said that while they subscribe to the U.S.-Iran ceasefire, they do not subscribe to the fact that the ceasefire should be all-encompassing and that their war with Hezbollah will continue. So still a lot of questions about whether this is going to translate into something more permanent, but for the time being, a step back from the brink, and of course, for the foreseeable future, no threat of imminent escalation.
What do we know about the talks, Jumana?
Yeah, well, the chief mediator here was Pakistan, and we know that there was a huge last-ditch attempt to get these diplomatic channels working with success. And, shortly after President Trump put up that True Social post, we also heard from the Pakistani Prime Minister as well. He then extended an invitation to all parties to attend an in-person meeting in Islamabad in the next few days. And a short while ago, the Iranian state media actually reporting, and this is state media, I should say, but they are saying that Ghalibaf will lead the delegation from the Iranian side. He, of course, is the very outspoken speaker of the parliament. He's also been very active on social media, very strident and critical of the United States. And on the other side, they are also reporting that J.D. Vance will be leading the discussions from the United States. Overnight, a lot of the reports suggest that J.D. Vance did play a seminal role in getting this deal across the line, the ceasefire agreement across the line, alongside China. President Trump actually did credit China in some comments this morning. He suggested that China actually put a lot of influence, a lot of pressure on Iran to come to the negotiating table. So again, some hope of a more substantial diplomatic breakthrough, and it seems as though those talks actually are going to go ahead later this week in Islamabad.
Joanna, thanks for the update. Appreciate it. Jumana Basechi joining us out of Dubai. Let's talk now to Sanam Vakil, Middle East and North Africa Programme Director, joining us from Chatham House. Good morning. Is the conflict over?
Good morning. The conflict is paused, and that's just because the negotiation is set to begin on Friday, as Jumana laid out, but really because both sides have still quite maximalist demands, and we have to see how much room for compromise there is between the two negotiating positions. This is a welcome pause. This is a war that nobody was winning. All sides have come out much weaker, but I still remain cautious because Iran's demands are really quite extreme, and it's hard to see them coming out having achieved everything.
Do you think the Straits of Hormuz returns to the free-flowing nature that we saw before the conflict? Do we go back to that? Do we not go back to that? What does the new reality look like?
Well, I think that's the key question. And if the Strait of Hormuz does not go back to the status quo before the war, then obviously I think this war has a chance to recommence at any time. Iran knows it has its leverage and can always exert that leverage. This will all depend on what kind of guarantees Iran obtains from the United States. Is this ceasefire going to become permanent? That is one of the most important demands that they're asking for. They do not want to see a repeat of this war. Secondly, what they are also looking for is so-called compensation or sanctions relief or access to their frozen assets. If Iran has economic lifelines that can help lower the sort of demands on the Strait of Hormuz, Iran is going to be isolated in the region. There is no return for Iran to the ties it had with its neighbors, particularly on the Gulf Arab side specifically. So that's important to remember. And if those conditions, if Iran is extracting a toll on the Strait of Hormuz, that is going to perpetually harden Gulf Arab views of the Islamic Republic.
Good morning to you, Sanam. Can I ask a bit more about the different factions within Iran, the hardline factions versus the reformists, to the extent that it's possible to identify who's in charge of those right now? As Jumana was telling us, the speaker, Galibaf, on the Iranian side, according to Iranian media, is going to be leading the delegation in the talks. What does that tell us about, does that tell us anything useful about the extent of what Iran will be asking for here?
Well, in terms of who's in charge, I think right now it's important to see the Iranian system as institutionalized, and they rely on a sort of consensus decision-making process. So Galibaf is probably out there as a key figure because he's well known. He's a regime insider. He's conservative, but also pragmatic, and has close ties as a former member of the IRGC. So he brings together a lot of different elements from across the Iranian system. He will not make decisions on his own. He will take, I think, what's on the table back to Tehran, and I think we will see a lot of back and forth. The state and health of the supreme leader is still very unknown. There are reports, of course, that he's incapacitated, but we should see this very much as a structural decision-making process rather than an individual that is in command and control.
And what about Iran's proxies in the region, Sanam? How much sway will Iran have over them and how they respond at this time? And we keep in mind, of course, Israel has said that it does not consider this to be a ceasefire on the Lebanon front.
Yes, that's an interesting demand on Iran's side, looking to shield Hezbollah and the Houthis from further strikes. I think that demand is really unachievable. And if Iran goes ahead and cuts a deal with President Trump and leaves the Hezbollah front vulnerable to further Israeli incursions and strikes, that will say a lot about the dynamics between Tehran and these proxies. Ultimately, I would imagine that the Islamic Republic will prioritize its own interests, but that is, certainly going to be a sticking point, and one that Netanyahu has already made clear is not connected to the process in Islamabad.
Sanam, how much sway does Beijing have in Tehran right now?
I think China has certainly played a very important behind-the-scenes role. I think that they pressured Iran or convinced Iran that as of right now, it has increased its leverage through the control it exerts over the Strait of Hormuz, and this was the right time to come to the negotiating table. So China also just vetoed a resolution at the Security Council, and perhaps this was part of the quid pro quo. China would support the blocking of that resolution, but would encourage Iran at least to come to the negotiating table. And we should see this as a first step. This is a pause. This is not a final settlement. We can all celebrate when this is done based on the terms and conditions of the deal.
Yeah, Sanam, this is a pause then, not the final deal. But if we look ahead a little bit about what we try to project forward, what we have learned from the last 6 weeks or so, this war in Iran. And I'm thinking here about if we look through the lens of great power rivalry and we think about the US and China, and picking up from Guy's question about China, to what extent has thinking about the US and China changed in the region? And there might be quite a nuanced answer there, I'm not sure.
Well, I think it's important. Remember, we're still in the fog of war without a settlement. I think we're getting more details out about how this war was planned and organized. Analysts like myself for the past 6 weeks have been critiquing the planning of this war, that President Trump entered this war on faulty assumptions, certainly convinced by Prime Minister Netanyahu, and the New York Times has released an important story confirming this. I think certainly people around the region are looking at the execution and the prosecution of this war and wondering what it has achieved. This was, remember, only meant to be 4 or 5 days, and in the 6th week, there has been a huge amount of damage, economic, human costs that we haven't really calculated yet, and relations across the region have been set back, I would say, by a decade, if not 2. There is deep mistrust, and so countries are looking at the United States, I think, and wondering what has been accomplished beyond all of this damage. And it looks like President Trump is cutting and running. He really wanted this deal. To extricate himself from this war. So I think this will raise questions, but it's also important to remember that China has played a behind-the-scenes role. China hasn't done more than that. China didn't swan in to support the Gulf states in any way. Either it sort of managed its own side negotiations with Iran, and that sort of leaves the region caught up in a great power rivalry without any of its own off-ramps and with limited tools to manage conflict that is imposed by external forces.
Sanam, thank you very much. Thanks for bringing us up to speed with your analysis. Sanam Vakil, Middle East and North Africa Programme Director at Chatham House. Coming up on the programme, we'll take a closer look at the outlook for oil as it plunges below $100 a barrel on the ceasefire, temporary as it might be, at least for now, in the Middle East. That is next. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. This is the opening trade. 49 minutes into a session that's proving to be really very positive, especially over in Germany for these European equity markets as we price in this 2 weeks at least ceasefire. That is the plan. That's what European equity markets look like then, and we need to focus on what's happening with the oil price.
Well, so front and centre, what happens with the oil price? What goes on next? Kind of, do we go back to where we were before? That's one of the questions that everybody's trying to figure out right now. It's down oil this morning the most in 6 years. Obviously, after this ceasefire deal has been agreed. Stephen Stepczynski joins us now, who leads our Asia energy coverage, to give us a sense of kind of where we go from here. Stephen, the screens look dramatic this morning. What are you hearing, though? What are people saying about what comes next? Like, what are you seeing on the screens, and is that real?
Yeah, I mean, I think there's obviously relief that there's been some sort of deal made. I think there is a reason for the sell-off. You know, the risk to more infrastructure damage has decreased significantly, right? That was one of the big risk premiums that was being priced into Brent, was every day that went by, as there were tit-for-tat attacks, as Iran sent drones and missiles across other countries and across borders, there was always fear that there would be material damage to infrastructure that would take years to repair. Luckily, you know, with this ceasefire, those risks have evaporated. Now what's being focused on is Hormuz, right? The part of the deal is opening Hormuz, but we haven't seen any real meaningful increase in shipments. Of course, this deal is just hours old. It will take a while for ships to figure out what their orders are, how this will go, how the exact passage will happen. So I think that's what the market is focusing on now, because the supply situation hasn't quite yet changed.
Yeah, Stephen, what will help us understand the definition of open and close when it comes to the Strait of Hormuz? The Iranians seem to be suggesting there's going to need to be some participation from their armed forces to allow some of these ships to get out of the Persian Gulf. So you can see we're showing a map now, almost live, I think, of where many of these ships are, and many of them will want to leave the Persian Gulf to try and deliver whatever it is that they are carrying.
Yeah, I mean, there are over 800 ships, a lot of those being oil, fuel, and gas tankers. And exactly how they're going to go through is unclear. Of course, Iran has said that there will be some sort of inclusion of their armed military, also if it reaches technical restraints. I mean, I think what we have to look at is the capacity. Because over the weekend, we had 20 ships go through. That was the highest level since the war began. But you have to remember that on a daily basis, there were 120, 130, 140 ships going through Hormuz. So are we going to be getting back to pre-war levels? It's unlikely, according to the analysts and the traders that we've been speaking with. Instead, you're going to likely see an increase in the amount, potentially, but that again depends on how much is Iran able to take. Are ships going to be going just through the Iran route, which has been the sort of approved route over the last few weeks? Will they go through Omani waters, kind of hugging the Omani coast? We saw one empty LNG tanker do that over the weekend. Will we see more ships go that way? Also, what is the tolling mechanism? AP reported that Iran will be able to receive tolls for the ships that go through, which had been also kind of common practice over the last few weeks. Over this 2-week ceasefire period, it's unclear how that will all happen. So what we're likely going to see is a lot of ships congregate near the Dubai Anchorage area as they figure out insurance, if the crews are willing or to go through, the safety reasons, if the ship owners are willing to take the journey, discussions with Iranian officials, discussions with Omani officials. I think there's a lot of technical things that sort of need to happen before we really start to see the flows increase from where we were over the weekend.
Okay, yeah, we're just showing that chart there, Stephen, on the screen, showing just what kind of drop-off we've seen in the amount of traffic going through Hormuz. Stephen, thank you very much. Stephen Sapczynski in Singapore, thank you for that. Joining us now with a look at the markets trading day ahead and into the rest of the week, Bloomberg's Skylar Montgomery-Koning is with us this morning. Skylar, your thoughts this morning. Looks like quite a lot of conviction on the face of it, doesn't it? But, I mean, this is reliant on a ceasefire holding, and that's only 2 weeks.
Yeah, absolutely. I think the moves today are very clear. You're kind of just undoing what we've had over March. So those kind of losers in equity markets, those were the economies and equity markets that were more exposed as energy importers, where there was less of a sector weight towards energy and more towards those sectors that use commodities as an input cost. And so we're really going to hurt from an earnings perspective. So that's just being undone. You're also seeing the kind of losers in terms of Korea, Taiwan, those kinds of moves that you saw very large in March to the downside, they can at least be kind of 50% undone or more so given the move we've had in Brent.
If we stay below 100 on Brent, are we okay? That's the question I think everybody's trying to understand. How much of a premium do I put onto the oil price now that I need to kind of keep there? And what level are we at a problem and what level are we not at a problem?
Because we started the year at 60-ish.
Yeah. Yes, that's exactly it,
like a
right?
long time
We've seen
ago.
this massive move, and you've already seen it in the economic data, and you've already seen it in the central bank response to that economic data, right? The Bank of England was supposed to cut in March, and then they didn't because you had this stagflationary shock. You're certainly not going to get cuts from the ECB, and that's a negative for equities, and so there should be a downward valuation
and for earnings, presumably.
Yeah, exactly. I mean, there will be some kind of inflationary impact. We've seen it very clearly in PMI data that input costs have risen, and so that means that earnings should have some kind of a downgrade from that. What I will say is equity markets are very good at looking through shocks. So during COVID, you were able to look through to that earnings momentum to the upside, but you got earnings downgrades first, and we haven't had that this time around. If you look at Eurostock's expectations for EPS for 2026, they've just been flat throughout the conflict because people have been hesitant to do those downgrades because they don't know where we're going to end up.
That was Anna's point,
yeah. So, I mean, yeah, we talked to Henry Allen earlier, who sounded a little more relaxed about the fact that, you know, oil prices didn't stay above 100 for all that long. And that seemed to him to be quite a material factor as to how much damage this does. But we need to be aware that this could do more, you think, Skylar?
Yeah, and I think part of it, too, is the yield story. We're not going to return to the low levels in yields that we had previously. We're certainly not going to get 3 cuts from the Fed, which had boosted equity markets previously. And so you do need some kind of valuation adjustment for that.
But presumably the energy shock starts now. These things are going to come out. It's going to take a long time to get there. Prices are going to remain higher for quite a while. Skylar, great to see you. Thanks very much indeed for stopping by to see us. Skylar Montgomery-Koning from Bloomberg M Live. That does it for us. What a day. The picture on the screen on your Bloomberg terminal is extraordinary this morning in terms of the rally that we're seeing. Look at the bond market as well. Look at the commodity market. It's just all over the place. Does it sustain?
Yeah, energy sector, the only one in negative territory for reasons we all understand. Travel and leisure, that sector up by 7.4%, having a good day. That is it for our show this hour. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Oil falls the most in almost 6 years, and stocks surge after the US and Iran agreed to a 2-week ceasefire, but a path to a permanent deal remains unclear. President Trump says the US will help ease congestion in the Strait of Hormuz, with the agreement also said to allow Iran and Oman to charge transit fees on ships. Plus, Israel backs the truce but says it does not include Lebanon, while some Arab states report attacks by Tehran in the immediate aftermath of Trump's announcement. Well, checking in on these markets, it is a remarkable day this morning. Relief sweeping around the globe. European stocks surging on that ceasefire, as they already have in Asia, as they're expected to do on Wall Street. Oil down the most in almost 6 years, below $100 a barrel on both Brent and WTI, down 13% now on Brent, and that's leading traders to pair ECB rate hike bets to now see about 2 hikes rather than 3 by the end of the year, and just 1 BOE hike. So massive moves in your bond space. Look at the 2-year gilt yield here, down about 25 basis points at the moment. The German 10-year Bund yield is down 17 basis points, and euro-dollar ploughing ahead on the flip side of dollar weakness. Now, looking across the European continent, green across the continent, as you can see, because of this relief, because of Europe's energy exposure to the Middle East conflict. The DAX, though, really outperforming this morning, up nearly 5%, given Germany is one of the most energy-intensive economies. And the FTSE is the underperformer, if we can call it that, up 2.3% at the moment, again, because of its exposure to energy. And we have Brent down, as I say, at $94 a barrel. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London. Well, the US and Iran have agreed to a 2-week ceasefire, sending oil prices lower and lifting global stocks. It's a temporary reprieve for the region, buying time for the two sides to reach a longer agreement to end the war. The US president made the announcement on social media, cautioning the pause hinges on the reopening of the Strait of Hormuz, and says that the US will be helping with the traffic build-up. Iran's foreign minister, meanwhile, said that safe passage through the waterway will be possible during that time, vowing Iran will cease defensive operations if attacks are paused. Pakistan, a key mediator, says that it'll host talks on Friday, though the US is yet to confirm its attendance. So for the latest, let's bring in Bloomberg Horizons anchor Germana Basecci. Germana, what do we know about the terms of the ceasefire? How did it get over the line when previously Iran had rejected the idea of a temporary pause? And really, when does it start?
Well, certainly there appears to be a very strong diplomatic push in the last couple of days. Chief mediator over here is Pakistan. The Prime Minister took to social media overnight in conjunction with President Trump to announce the ceasefire, a 2-week ceasefire. And of course, it is a relief. It is a relief for global markets, but it's obviously a relief as well for people in the region that the very worst case scenario was avoided. And President Trump announced that ceasefire about 90 minutes before his deadline of unleashing destruction on Iranian infrastructure if they did not agree to the U.S. terms. And that was followed up by comments from the Iranian Foreign Minister Abbas Araghchi echoing that they had agreed to a ceasefire, but for the foreseeable, over the next couple of weeks, any vessel looking to pass through the strait would have to do so in coordination with Iran's armed forces. A crucial point here, I think that's worth mentioning. And then a couple of hours later, it took about a whole 4 hours. We also heard from the Israeli Prime Minister as well, Benjamin Netanyahu, lending his support to the ceasefire so long as Iran stops their attacks on Israel and on the region as well, but then also emphasizing that from Israel's perspective, it does not apply to Hezbollah. So where we go from here, we know that it's a 2-week ceasefire. There is a push for in-person discussions to take place in Islamabad later this week. Iranian state media reporting that J.D. Vance could be heading up the U.S. delegation. Unclear at this point who's going to be heading up the Iranian delegation, but of course, the Speaker of the House, Mohammad Ghalibaf, is one of the names that is being put forward. And ultimately, this is a question of whether you can bridge the two sides' respective stances, because what the U.S. is asking for is very different from the counter demands that Iran have put forward, including their insistence on maintaining some form of sovereignty over the Strait of Hormuz.
And as you say, that is what's crucial for markets, the fact that the Strait was included in this ceasefire. Jemana, what detail do we have on how vessels will make it through the Strait safely?
Well, we don't have a lot of detail apart from the fact that Iran are once again reiterating the point that any vessel that wants to go through needs to do it in conjunction, in coordination with Iran's armed forces. So this in itself is a non-starter for Gulf nations, for pretty much all nations around the world that agree that this should be a free maritime corridor. So that's the starting point. But we also know that there are about 800 vessels stranded in the Persian Gulf right now. Only a handful of them have been trickling through the strait on a day-to-day basis. Prior to the war, we saw about 100 to 120 vessels passing through. Now it's anything between 4 and 6. And of course, they're only getting through with the permission of the Iranians. And then overnight as well, Associated Press reporting that there is a plan being put forward in which Iran would be charging a transit fee for vessels going forward that would be split between Iran and Oman, and the proceeds from those fees would then go towards reconstruction and war reparations. That is the proposal, of course, that they're putting forward. Again, a non-starter for many Gulf nations. And I think the bigger question here is, number one, how long it's actually going to take to return back to normal, if this structure, this new protocol around the Strait of Hormuz is actually going to hold, and whether the in-person discussions can yield a different outcome. And finally, how long it's going to take for the broader energy infrastructure in the region to resort back to normal as normal as before, because as we've been talking about, over 40 sites in the region have been targeted, and many of them have been severely damaged. And we're talking about months, possibly even years, for some of those damages to be fully restored back to normal.
OK, so many years, many questions left to answer here. Bloomberg's Horizons anchor, Jemana Bassetti, thank you very much. Well, because of lower oil prices this morning, notably WTI down more than 15%, we are seeing we're seeing oil majors in the US down heavily in the pre-market. The likes of ExxonMobil and Chevron there down more than 5%. And this is as we see WTI currently trading at $95.63 a barrel, but broadly, futures stateside pointing higher. S&P E-minis up 2.5% and Nasdaq futures up 3.2%, following the relief that we're seeing around the world. It's not just in the stock space. You're also seeing European bonds and treasuries rallying this morning. Let's bring in Miles Bradshaw, Head of Global Aggregate Strategies at JP Morgan Asset Management, for more on that. Well, Miles, we're already seeing a repricing of Fed and ECB bets. At the moment, you're seeing Fed cut bets revived and ECB hikes being paired. You were already saying that it wasn't obvious central banks would hike as much as was being priced. So is there room for even more repricing than we're seeing at the moment?
I think so. I mean, I was looking this morning at what the oil market is pricing and the energy markets, the natural gas in Europe, and it's pretty similar to the ECB's baseline scenario, energy scenario, back from their March forecasts. And that's a world where inflation, it doesn't pass through significantly into core inflation, growth is a bit weaker. So I think you can take out more hikes from the European central banks, most definitely. The question is, you know, why were the European central banks raising rates? They were raising rates because their concerns were about inflation expectations. They weren't raising rates to create a recession so that there would be service deflation to offset energy inflation. It was about second-round effects. And as you're seeing the energy markets come off, as you're seeing the energy shock diminish, the risk of second-round effects comes down. The whole thing about second-round effects is uncertainty. They're not sure the pass-through. What's quite clear is the economy today is not where it was in 2022 when the Ukraine-Russian war started and energy prices exploded. Inflation's much lower, labour markets are looser, interest rates are much higher. So really their concern is about the risk of inflation expectations, and most likely I think the central banks will wait and see rather than preempting, and I think the bond market is pricing a lot of risk that actually they go ahead and are preemptive in terms of raising rates to anchor those inflation expectations.
Well, yeah, what if the ceasefire doesn't hold? In 2 weeks, do we just see bonds go right back to where they were?
I think it's possible, but I think we've reached the point where we know sort of the range that the market is likely to go in terms of pricing hikes. Let's say sort of 3 hikes from the ECB. That's the sort of worst-case scenario we got to during sort of the most stressed periods of the energy markets. And I think we saw at that point the market started to worry more about growth. And I think the key thing from my perspective, if I look at risk markets, credit spreads, for example, markets are pricing inflation risks. They're not really pricing so much in terms of growth risks. Credit spreads, if you look at the crossover, is a few basis points above where it was at the end of February, yet bond yields are much higher. So I think, you know, if we see this energy prices escalate again, you could see bond yields go up a touch, but I think we've seen the maximum the market can price in before we start to think about demand destruction and potentially a recession risk becoming more elevated.
So you can put the demand destruction part onto one side, but is it not the case that it's going to take a long time to rebuild this energy infrastructure? It could be a while before you get safe passage through the Strait of Hormuz.
Yeah.
And then, you know, oil analysts telling us that oil could stay elevated, not go back to pre-war levels.
Yes.
So we've got to factor all that in, surely.
Yeah, and does that mean the central banks raise rates? I think that's the critical question. And I think when you plug all the level of oil prices, what we're pricing, I mean, you could look at December, with pricing a more elevated level of energy prices than we had in February. The inflation shock is relatively small, and I think what's uncertain is the growth shock, because the economy is in a more vulnerable position than it was in 2022. And I think in that world, central banks err on the side of caution and will wait to see the economic data. And let's remember, you know, European economy has been plugging along okay. In the UK, the unemployment rate is rising. The central bank was probably going to be cutting rates in March if it wasn't for this energy crisis. And the market is still pricing over 1.5 rate hikes this year. So I think we're pricing a lot of the bad scenarios where central banks are all focused on inflation because of the energy price, and we're not concerned about growth. So I think there is still value there in the bond market.
So perhaps the BOE doesn't hike at all?
I think that's the most likely scenario. And the question is, how does this crisis unfold, and how does the energy crisis unfold? Will they be cutting rates? That's the question I'm asking myself. Will they be cutting rates this year if this is indeed the off-ramp that we see oil flow begin to pick up from here on in through the Straits of Hormuz, with various conditions attached? Will they be cutting rates because the real economy is in not a great shape?
I did think it was quite surprising at the last BOE decision that even the most dovish members of the Monetary Policy Committee, the likes of Swati Dhingra, sounded quite hawkish so soon into the war.
They sounded hawkish because they wanted to be clear that they will anchor inflation expectations. Subsequently, they've come out and have watered down some of that hawkishness, saying we will need patience to look through this. There's a range of views out there. So I think what they were quite clearly saying is a uniform message to the market and to the public we will not let this energy crisis morph into another inflation scare. But the key thing is the economy is very different than where it was in 2022, so the risks of pass-through are much lower today. The need to hike rates is much lower than it was in 2022, and let's remember interest rates were near zero. So we're in a very different world, and I think what's happened in the bond market is you've also had a large degrossing flow, massive moves, very thin liquidity that has seen value come in the market.
So just finally, what's your take on the private credit concerns? It's been bubbling away in the background. Are you less concerned now about contagion risks when you have less risk of weaker growth because of a prolonged Middle East conflict?
I think the contagion risk, we've kicked the tyres thoroughly, and the contagion risk is really about risk appetite, risk sentiment, the closure of these, I say closure because they were always semi-liquid private credit funds that had the ability to limit the outflows, and that's what they're doing, then affects risk appetite. It affects the availability of credit for new borrowers, and that then can cascade into slightly wider spreads. So I think that risk remains. But if you think about a systemic crisis similar to what we had in 2007, we don't have the same leverage in the system. We don't have these funds that are highly levered and need that short-term financing to keep going. And we think the system has a lot more capital, so we're not as exposed to that kind of systemic crisis. So if you see widening, it's more likely to be an opportunity to buy into higher risk premium because people are worried.
OK, great to have you on, Miles.
Thank you.
Miles Bradshaw, Head of Global Aggregate Strategies at JP Morgan Asset Management. Thanks. Well, coming up, we'll be talking to Alessia Berardi, Head of Emerging Macro Strategy at the Amundi Investment Institute, about the impact of the Iran war on emerging markets. That's next. This is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg. Asia is at the forefront of some of the world's biggest stories. I'm Shevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
As details continue to emerge about the 2-week ceasefire, markets are finally taking a breather from the risk of escalating conflict and surging oil prices. But the deal remains fragile, and the impact of the conflict will likely reshape the Gulf for many years to come. Ziad Daoud, Chief Emerging Markets Economist at Bloomberg Economics, joins us now. Ziad, good to have you with us. I wonder what, in your mind, are the top critical unanswered questions now surrounding this temporary ceasefire?
Sure. So I think things had to get really bad before we got a breakthrough. And yesterday was quite bad in terms of the threats that we were hearing, in terms of the rhetoric that we were seeing from President Trump, and in terms of potential escalation that we were, that was potentially going to see in the Middle East. We have the 2-week ceasefire now, and I think there are 2 unanswered questions that could basically make it more complicated: Lebanon and Hormuz. On Lebanon, there's an ongoing Israeli invasion of Lebanon. The Prime Minister of Pakistan, who mediated the deal, says it's immediate and it's effective everywhere, including Lebanon. The Prime Minister of Israel says it doesn't include Lebanon. So that's already one source of complication. The second one is the Strait of Hormuz, which has been largely shut for more than 5 weeks. There are questions. Will traffic return to normal in Hormuz? Will Iran continue to vet ships going through the strait? And will it continue to collect fees from vessels that are going through the strait? I think these are the two crucial questions that can complicate the implementation of the deal.
So bearing that in mind, what does the ceasefire mean for the global economy?
I think between yesterday and today, it's a relief. Let's remember that this is a season for people like me, macroeconomists, to come up with their forecast. The IMF is going to publish its forecast next week, the World Bank next week. Us at Bloomberg Economics actually are going to publish our forecast this week. And the crucial is what is going to happen to oil prices, and the big determinant of oil prices is the direction of war. Yesterday, oil is at 110, potentially rising. Today, or now, oil is at 95, potentially falling. That's a big relief to the global economy. That means inflation may not be as high as the worst-case scenario is. Growth may not be as low as the worst-case scenario is. And the transfer of income from consumers to producers may not be as bad as things looked yesterday.
But if you focus specifically on the Gulf, how is the war going to reshape the region's economy and security? Because it seems like the damage there will be more lasting.
Well, I think even if the war ends tomorrow, I don't think any Gulf leader will emerge from the experience unchanged. And I think all of them will face 4 questions. There's a question about how to defend borders and cities, having been under attack for more than 5 weeks. There are questions about how to deal with the US. On the one hand, US military equipment have proven to be effective in defending the Gulf cities, but US political administrations have not been so reliable. There are questions about how to provide energy to the global economy now that the Strait of Hormuz has been shut once and could be closed again, and whether they would invest in rerouting and diverging routes that have proven so effective during this conflict. And there's a question about cooperation versus competition within the Gulf. My hunch is that the 6 Gulf countries are facing common questions, but they'll probably come up with different answers to these 4 questions.
OK, really great to get all your questions and answers, Ziad. That's Ziad Daoud, our Chief Emerging Markets Economist at Bloomberg Economics. Thank you. Well, emerging markets have been enjoying a global rally, as everyone has, as the ceasefire has revived risk appetite. Alessia Berardi, head of emerging macro strategy at the Amundi Investment Institute, joins us now on set. Really good to have you. I mean, this is the best day for EM stocks and currencies that we've seen since November 2022. Low oil, a weaker dollar. Should investors be treating this ceasefire, though, with caution, given just how fragile it is?
Yeah, I think we need to treat it with caution because of the reason just said, right? We have to assess how long it will last and what will be really the sustainable negotiation between the two parts. So normally when we look at emerging markets, you look at the impact coming from global conditions, global financial conditions, and more idiosyncratic themes. Of course, this morning we are seeing a quite important relief on global financial conditions. So dollar is weakening. Core central banks' action is repricing towards less tightening. ECB, Bank of England, Fed was not really tightening, but in any case, there is a global financial conditions relief. Then you look at the domestic conditions, and then the impact of oil on growth and inflation. And even, looking at that, you are in a situation right now where you will have a much lower oil price than yesterday morning, and expectations are for lower price. That means less stagflationary impulse across the board.
So does it help to draw a line under some of the vulnerabilities in EM that we had seen, particularly exposed by that stronger dollar?
Yes, it is, but we have to look at emerging markets with, they are not really an homogeneous set of countries, right? There are countries that are more externally vulnerable and others that are less. Over the years, emerging markets have been building quite important buffers in terms of external vulnerabilities. So let's start to mention, for example, reserves. So there are countries in emerging markets that are sitting on a quite important level of reserves, and that helps to, defend the currencies. There are countries instead, like Turkey. We saw Turkey in the recent weeks, how they were struggling to actually defend the currency through the reserves that are quite thin in the country. So we need to, again, discriminate between emerging markets in terms of external vulnerability.
OK, and just coming back to something that Ziad was saying and the questions that he was highlighting, is it that you would be more focused on what actually is happening in the Strait of Hormuz, the passage of ships through the Strait of Hormuz, than every little report about progress in potential talks when it comes to how it will impact markets?
I think the two things are very much related, right? We need to look at how the talks are going, but we need really to measure how the traffic in the Strait of Hormuz is increasing daily. So we know that last weekend there was a little blip of, increase in terms of traffic, still very far away, 10% maybe in comparison to the pre-war conflict. But this is very important because in order to, make this see more oil shipped to these countries.
And which countries do you expect to be hit hardest when you think about that prolonged damage because of the time it's going to take to rebuild energy infrastructure?
Of course, the net energy importers are the ones hit more strongly, right? And we have, India, we have Turkey, we have some examples across emerging markets. Asia in general is really an important destination for oil from the Strait of Hormuz, so we are really looking at how that is impacting the region, Thailand, Philippines. Overall, inflation is one of the impacts, but then in order to keep inflation down, these countries are putting in place measures that are at the moment temporary, but still they are hitting more and eroding the fiscal buffer. And then you need to see how expenditure will be diverted between more productive expenditure to assistance or subsidies before really calling for a fiscal slippage. So there are several ways of this shock impacting these countries, and this is what we are looking at.
Yeah, and it's been interesting to see that regulatory response as well as, well, in lieu of or before a fiscal or monetary response,
yes,
and wondering about the growth impact of that. I also just want to get your take on Hungary, because, of course, we have seen J.D. Vance, the US Vice President, in Budapest supporting Prime Minister Viktor Orban. And I wonder how much further Hungary's markets could rally if Orban is ousted.
Yeah, I'm glad you make this question because it reminds me the fact that we are going back to idiosyncratic themes, and we are leaving for a while the big, systemic risk. So as far as Hungary is concerned, I mean, in this new kind of environment where we do have even emerging market central banks to rethink about their next steps, Hungary's central banks is one of them where, that can return to a much, let's say, more pronounced easing than what it was priced right now, right? And therefore, it is supporting our constructive view on local debt in Hungary and the Hungarian florin.
OK, Alessia, great to have you with us this morning. Alessia Berardi, Head of Emerging Macro Strategy at the Amundi Investment Institute. Thank you. Well, coming up on the programme, the shipping industry is scrambling to understand what the US-Iran ceasefire actually means for passage through the Strait of Hormuz. So we'll get you more on that in a moment. This is Bloomberg.
The problem we've got as an industry is when the governments overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London, and these are your top stories. Oil falls the most in almost 6 years, and stocks surge after the US and Iran agree to a 2-week ceasefire. But a path to a permanent deal remains unclear. President Trump says the US will help ease congestion in the Strait of Hormuz, with the agreement also said to allow Iran and Oman to charge transit fees on ships. Plus, Israel backs the truce but says it does not include Lebanon, while some Arab states report attacks by Tehran in the immediate aftermath of Trump's announcement. Well, this is a remarkable day in markets. We have oil prices plunging below $100 a barrel after the US and Iran agreed to that 2-week ceasefire. The deal involves halting military action in exchange for Iran reopening the Strait of Hormuz to global shipping traffic. President Trump says that the US will be helping with the traffic build-up. Let's now bring in Bloomberg's Middle East energy reporter, Anthony DePaula. Anthony, just talk us through what we know about the agreement to reopen the waterway. Is it likely that we'll see oil prices getting back to pre-war levels?
Good morning, Lizzie. Well, there's a lot that we still need to know, really, before we can see any kind of normalcy returning to the market, really, because we are looking for ships to start moving out of the Gulf. As you remember, when the Persian Gulf was closed because the Strait of Hormuz was effectively blocked by Iran, it has really choked off most of the flow out of the Gulf. So we've got a lot of vessels that are in the Gulf laden with crude, refined products, chemicals, and those vessels have not been able to get out of the Gulf because of the blockage at Hormuz. So pretty much all movement stopped during the month of March. So we're going to have to see those vessels getting out of the Persian Gulf, clearing out that backlog of vessels there, and it'll be really a question of testing the waters, as it were, excuse the pun, testing the waters in terms of whether those vessels are able to safely navigate Hormuz and get out. And we are really just watching the tanker traffic there, also speaking with the shippers, speaking with the tanker owners, the producers, to see what their level of comfort is in terms of getting out and what they understand the rules are. So we've seen, conflicting plans and conflicting terms for how they would get out. So we're really going to need to see that oil start to flow and then see some permanency to this agreement that is a longer ceasefire or an end to the conflict before we can see prices getting back to normal, Lizzie.
Yeah, we just want to know whether oil can get back to where it was. But, of course, we've got to factor in all of that damage that's been done to energy infrastructure as well.
Yeah, exactly. I mean, prices were quite a bit lower when we were coming into this. Then we built in that risk premium, and then we did see damage, and we actually saw the cutoff of supply. So these are the real kind of touch points that the markets wanted to see to go higher. So we are still in that area where we've got unspecified damage because refineries have been hit, LNG facilities have been hit, and we don't really have a readout on all the damage there. Plus, oil fields have been shut in, and so depending on the how those have been shut in, the skill of the companies in shutting them in, it will depend on how long they're able to get back up. Plus, you'll need rig crews, drilling rig crews, technicians to get back in. A lot of offshore rigs in the Gulf have been evacuated because they came under attack, and that's where we've seen some of the fields halted. So we're going to need to get a little bit more certainty in the market before workers can come back in, before tankers can come back in, and before those things start moving. So right now, we're watching first for tanker movements, then potentially for some additional tankers coming into the Gulf to pick up, and at that point we might see some additional production coming on. So we need to see those things happen before we do get much lower. Prices have come down a huge amount. We're talking over 15% today, but we're still in the high 90s, whereas we were in the 60s, 70s leading into this. So we've still got a ways to go before we get back to normal, Lizzie.
Yeah, important context. Anthony, thank you. That's Anthony DePaola, Bloomberg's Middle East energy reporter. Well, focusing in on shipping, you have ship owners racing to understand the fine print of that US-Iran ceasefire and what it actually means for vessels trapped in the Persian Gulf. Just in the past few moments, we've had BIMCO, the Baltic and International Maritime Council, saying that ship owners are awaiting technical guidance on Hormuz transit. Iran says that it'll allow safe passage through the strait in coordination with its armed forces and within technical limitations. President Trump, meanwhile, says that the US would be helping with the traffic build-up. For more, I'm joined by Bloomberg's Alaric Nightingale. And Al, I do wonder, how is the shipping industry reacting to this news this morning?
It's much along the lines of how you just summarised it. I think there's a lot of caution. What is this ceasefire exactly? How agreed is it? Are all the parts of it? There are so many things that are kind of unclear. If you look at the 10-point plan that Iran is supposedly putting forward, there seem to be different kind of demands that we're seeing. So what is, what's the actual detail of the plan? And then, do you want to be the first wildebeest in the river to check if there are crocodiles? So that's, if you're an owner, you're looking at the other guy and saying, are you going to go first? No, you, and see, build up some confidence. And one of the things that people are saying to us this morning is they need to see others go first and see how the kind of the safety looks in practical terms when you start to see transits, and then they'll take a view. So it's a kind of a chicken and egg situation. And the same goes for insurance even. That's going to be, if this becomes a normalised situation, the first step is, or one of the key steps is going to be insurance. The very first one probably going to charge quite high prices, and then you'll find a more kind of appropriate market level as you understand the risk. So all of these kind of things are a chicken and egg process to just try and sort of figure out how safe it really is, and that's where we're at right now. It's interesting when you look at the shipping stocks in Europe this morning. You've got Hapag-Lloyd up 5%, so clearly relieved, but Maersk down 1.4%, Kuehne + Nagel only up 0.25%. I wonder, is it that different shipping companies have different obstacles to get shipping traffic back to normal? I think there's some of that, and there's probably a lot of kind of aspects of their operations and their kind of logistics that are very different. So it might be about fuel costs. If you've got a particular kind of hedged position or an unhedged position, and suddenly you've got much lower fuel costs, that could be very helpful to you. I'm not speaking of those particular companies, but you will see a kind of a fair degree of variability between two different shipping companies about how they might respond kind of stock-wise to a more kind of peaceful situation. OK, well, as you can see on the screen, it's absolutely plummeted, the amount of crossings through Hormuz, just down to an absolute trickle if you compare the left to the right of the screen there. But great to get your analysis, Alaric. That's Bloomberg's Alaric Nightingale. Well, Pakistan has emerged as a key player in helping to deliver this ceasefire between the US and Iran. The country's Prime Minister publicly appealed to both sides to agree to a truce, setting the stage President Trump's announcement hours later. Joining us to discuss is Julian Barnes-Dacey, Director of the Middle East and North Africa Programme at the European Council on Foreign Relations. So great to have you with us this morning, Julian. Will the ceasefire hold?
Look, I think the truth is it's a very precarious situation. Both sides have seen the desire for a short-term opening here. But there are some pretty maximalist demands on the table from both sides, and I don't really see there being a great prospect of a more inclusive agreement to hold things together. So perhaps we muddle through, but I think that negotiations are going to be tricky, and the situation is going to be complicated for some time going forward. I think the key question is, how much does Trump want out? He is not going to get the kind of big deal that he wants. Iran is not going to give him the kind of concessions that he has put on the table as seeking for a long time. So the question is, will he accept less to extricate himself from this situation?
Yeah, if he walks away at this point, can he really call it a victory, Julian?
Well, I mean, I think it's clearly not a victory. He's going to spin it 1,000 different ways to claim a victory. But at the end of the day, the Iranian regime is still standing. It still maintains its nuclear capabilities as it was before the war, its missile capabilities. And now it's imposed itself on the Strait of Hormuz and seemingly is going to be allowed to take a toll on ships coming through. So I think it's more Iran that has reasserted a degree of deterrence, has widened its strategic posture in the Straits of Hormuz, and has really forced the Americans to back down from their demands in terms of what the desired outcome was here.
So that's the gains for Iran. But on the American side, is this war leaving the US diminished in the eyes of its allies?
I think the US comes out of this seriously diminished. It hasn't won militarily, strategically, politically. It has shown itself to be a fickle ally of sorts to many of the GCC states. It's now looking to cut a deal with Tehran that undercuts regional security and does very little to address their core interests or the core ambitions laid out by the US. So Trump definitely comes out of this a weakened president. He has been unable to deliver on what he sought to gain, and certainly the U.S. capabilities to drive the strategic agenda in the Middle East has been very weakened, and the Iranians are the ones now setting the agenda.
And how are Russia and China looking at this?
Well, I think that the Chinese, by some accounts, were involved in trying to press towards a ceasefire at the end of the day here. I think the Chinese in particular have a strong interest in seeing oil shipments resume. They have a strong demand and supply need out of the Gulf, so they clearly played a role. I think the Russians were more willing to sit quietly, watch this conflict unfold. They obviously saw a lot of gains in terms of the rise of oil prices and the lack of US military and political focus on the situation in Ukraine. So a bit of a mixed bag between the two different sides there. I think the Chinese, as I say, more looking for some kind of deal here. The Russians presumably more happy to see the US get sucked into a longer term conflict.
Just in terms of how this pans out more short-term, Julian, the semi-official Iranian student news agency has been reporting that the Iranian parliament speaker, Mohammad Bagher Ghalibaf, is going to lead the Iranian negotiating team with the US in Islamabad on Friday. What does that tell you about how talks are going to be conducted from Tehran's side?
Well, look, I think the truth is the Iranian regime has hardened, has become more securitized and more controlled by the IRGC since the killing of the former supreme leader. The parliamentary speaker is seen as hardline. He himself is affiliated with the IRGC. So this just gives you a picture of where the Iranian regime is today and what Trump has achieved since the war began. Trump has talked about a regime change, but we have not seen regime change. We've seen a hardening of the regime, and now the US is going to have to negotiate with even more hardline figures.
OK, and how precarious does it make the ceasefire that Israel says the deal doesn't extend to Lebanon? A divergence from what we were hearing from Pakistan. Do you get the sense that Israel isn't fully on board here?
I mean, my sense is that the Israelis are going to be very unhappy with this deal. We've already seen the Israeli opposition leader coming out saying it's a complete disaster. The Israelis are now saying it won't include Lebanon. Netanyahu feels the pressure to do what Trump says. He can't completely denounce Trump's agreement, but I think there's a strong likelihood that the Israelis will look to create fractures, weaknesses within the agreement, look to unravel it, to spoil the process, and Lebanon is clearly a place where they could take that forward. But if you are Israel today, you have seen a conflict unfold that now leaves Iran stronger and potentially in a position where it can cut some kind of deal with Trump that enables it to maintain its core strategic capabilities in a way that Israel was looking to bring down prior to the conflict's beginning.
OK, appreciate your insights this morning. That's Julian Barnes-Dacey, Director of the Middle East and North Africa Programme at the European Council on Foreign Relations. We're just breaking across the terminal during our conversation. We did have some latest news on the ground from Iran, and that is from the semi-official Mehr news agency saying that several explosions were heard at Iran's Lavan refinery. The source of those explosions, however, is unclear. So we'll keep an eye on what's happening there. Of course, it is unclear when the ceasefire is set to begin. But coming up, biopharma in focus. We're going to be speaking to the CEO of private equity firm Jato Capital after its new fund raised over $1 billion for clinical trial research here in Europe. That's next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is The Pulse. I'm Lizzie Burden in London. Well, as we take in the news of that 2-week ceasefire between the US and Iran, the Federal Reserve Bank of New York President John Williams has said that risks to inflation and employment from higher energy prices are in balance and that he favours holding interest rates steady. Williams added that he expects inflation this year to be around 2.75%. He sat down exclusively with Bloomberg's Mike McKee in New York.
To my mind, monetary policy today is really well positioned, given where all of those dynamics have been playing out, and well positioned to kind of wait and see on some of the effects of what's happening today. This isn't. I'm not saying we're just in some kind of we can't act. I think this monetary policy is exactly where it needs to be, and then we can respond if the situation changes. Right now, I think that monetary policy though is pretty well positioned, given what we've been seeing so far.
Monetary policy is well positioned, but what about the economy? What's the state of the economy?
Yeah, well, if you asked me this a month or two ago, we would be talking about remarkable resilience of the economy, growing at 2% last year, looking to grow even faster this year. Clearly, with the conflict in the Middle East, that changes that a bit. Consumers, families are going to be paying higher fuel costs, gas price, with the gas price increases. So I've been bringing down my forecast for growth this year, probably somewhere between 2 and 2.5% for growth this year. An unemployment rate probably staying around where it is now, 4.3%. And economy that's continuing to grow, but roughly at trend. Again, driven by consumer spending and investments, especially in AI.
Well, you mentioned unemployment. You cut rates in the last year, we were told, basically to prop up the labor market. What is the state of the labor market? Is that accomplished?
Well, it's hard to read all of the tea leaves because it's a pretty complicated situation with the labor market. We are seeing some various kind of different signals. My view is if you look at the unemployment rate, it's today at 4.3%. It's about where it was in July. So we've seen some stability there in terms of the unemployment rate and in job openings and some of the other indicators. So I feel like we've seen the labor market much more stable now. Definitely not a labor market that's weakening based on the economic indicators. That said, if you look at the surveys, including the survey that we do and the Conference Board survey, that's not how people are, kind of feeling about the labor market. Definitely, we've seen a continued process of people being more pessimistic about the labor market, not about a recession or something, but just a view that this is a pretty low hire. Low fire labor market, and maybe the views are not as strong as you would think just looking at the aggregate payroll and unemployment data.
New York Fed President John Williams speaking to Bloomberg's Mike McKee. Well, turning now to healthcare, a biopharma-focused private equity firm has raised $1.2 billion for its latest fund to deploy money into clinical stage companies here in Europe. JATO Capital says that it's exceeded its initial target, tapping into increased investor interest from the US. The funds will be used to help develop breakthrough therapies for severe diseases. And I'm pleased to say we're joined now from Paris by Raphael Torjman, founder and CEO of JATO Capital. So really good to have you with us, Raphael. Congratulations on this latest funding round. I do want to start, though, with the impact of the geopolitics. I wonder how the situation in the Middle East and the associated inflation is impacting fundraising in life sciences. Good morning.
Good morning, and thank you very much for your kind words. Indeed, it's a quite achievement with a $1.2 billion raised after the Fund 1 raised only less than 5 years ago of $630 million. And this is on a strategy that is actually very much differentiated, proven with Fund 1, and to answer to your question, independent of the geopolitical problem, because it's without cycle, without bubble, you always need new drugs for very severe patients. And we are targeting exactly the pharma demand, the big pharma who is commercializing most of their drugs, 70% of their drugs, coming from smaller companies that we finance. And they are losing regularly their patent life of the drugs, and they are losing, it is estimated that by 2033, they will lose for $400 billion of revenue a year, with for some of the pharma representing more than 50% of their revenues per year. So JATO is really targeting this demand, and it's without end, unfortunately, for human beings and all these patients, and it's exactly what we are targeting: the pharma demand, patient benefit that will drive the financial performance, and also the European market. So geopolitical environment has been, I would say, even helpful, because for Europe is more stable, I would say, but also the fact that we are in an industry that is very much, again, without cycle bubble. You could have acquisition for billions of, including private companies, like in our portfolio, even in a difficult environment.
Within Europe, there's a lot of focus on the need to value innovation better, to pay more for new medicines. Do you think that policymakers are catching up, moving fast enough to stop Europe falling behind?
So the richness of Europe, and it's why also we raised the first fund, but also the second fund even larger, is the fact that there is a lot of very good R&D, high quality, but there is not enough capital in Europe, particularly at the stage when we invest, which is a clinical stage, where you could anticipate the future value of the patient, the number of patients that the drug will target, and the benefit for patients that will define the price and the reimbursement of the drug. And Europe still represents, 30% of the 5 countries of the market in innovative drugs. So the richness of the R&D, needing financing, is exactly our strategy, and we think we are at the right place and the right time because also of Europe. So it's even an advantage. And then you have to indeed work with different countries, but just the 5 biggest countries in Europe is already 30%, and US is 50% of the market of innovative drugs.
I'm interested as well in your thinking around the obesity drug market. What for you holds the most promise there as we move beyond Wegovy and Zepbound?
Yeah. So obesity is a very important market. It was not some years ago. Actually, it was seen more like a lifestyle almost, and then pharma realized the impact of treating obesity on consequences cardiovascular and actually to increase the GDP of countries. And we actually just done an investment with a new fund, Alveus Therapeutics, which is a Danish-American company, and with new drugs that could actually avoid the side effect of the first generation of GLP-1, like Ozempic, for example. So this is a big market, and I would compare that because it's a market estimated by 2030 to at least 150 billion a year. So there is room for several players, actually. So we need to be there to finance this innovation, to then have acquisition by pharma, like we are working always with our team of multiple talents inside the investment team of G2 to accompany and to retro-engineering the future value and the future cash flow of the drug. So yes, obesity is very important, and there is room. In a way, it's a little bit like statins some years ago, or 20 more years ago, where you will have several drugs. And if I may add that we are investing in very severe cause and patient and disease, and obesity is one of them. But one comparable is also in terms of impact on the society, and very severe, is also the fertility. The decrease of natality in the world now, almost everywhere but Africa, is a real problem, including a very big impact also on the GDP. And we have invested also in this field of fertility with Repronovo. And it's interesting to see that Lilly announced that after obesity, they want to be in the field of reproductive medicine.
Interesting. You seem to be a leader in this space. Raphael Torjman, J2 Capital founder and CEO, thank you very much for your time this morning. Well, it is such a remarkable day in these markets. We should check again on the moves that we're seeing around the world. The Stoxx 600 here in Europe up now 3.5%. So pairing some of the earlier gains that we had seen, but still oil, Brent, below $100 a barrel on this two-week ceasefire between the US and Iran. The impact of that on bond markets incredibly pronounced. We're seeing double-digit drops in particularly at the front end when it comes to yields. Just as an example, the two-year gilt yield down 24 basis points at 4.16. And as we look ahead to the Wall Street session, futures pointing higher there too, up 3.4% on NASDAQ futures. Up next, Bloomberg Brief. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
is 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks are soaring and the dollar dips after the U.S. and Iran agreed to a 2-week ceasefire. Oil drops back below solidly $100 a barrel as ships await a temporary reopening of the Strait of Hormuz, and treasuries rally with bets that the Fed will resume its rate cuts and auction for 10-year notes on deck this afternoon. Let's take a look at what's going on in the markets. You can see S&P futures at their session highs right now, up 2.7%. NASDAQ futures up 3.5%. The small caps doing even better. So a massive rally here, and we have seen a massive rally in Europe as well, with some benchmark indexes rising almost 5% this morning. Take a look at what's going on in Treasuries here. You can see the rally pushing down on yields. So the 2-year yield down 7 basis points to 371, 372. The 10-year yield down 6 to 423 even, and the 30-year yield down 3 basis points to 484. Of course, most importantly, oil, or at least it has been driving this market over the past month and weeks as the war kicked off. Brent crude down 14% to 94.45. We are looking at NYMEX WTI down 16%, and at one point it had been down almost 20%. Right now trading at $95. Yesterday it traded up to $117, and we saw Brent crude for delivery reach an all-time record since record keeping began. Gas, oil, fuel trading on the Intercontinental Exchange down almost 20% as well, 18% the drop there. For some of the individual stock stories that we're watching this morning, let's get out to London. Chloe Millay is standing by. Chloe, what have you got?
Good morning, Matt. As you just mentioned, the reopening of the Strait of Hormuz, this 2-week ceasefire that has been announced, has sent oil prices tumbling. And so we are seeing that reflected in the shares of those big oil companies that had, of course, been really benefiting from this major disruption to global energy supplies since the beginning of the year. So we're seeing this reversal in sentiment and all of those names falling significantly today. On the flip side, we've got airlines that are doing much better. This is a sector that had really struggled since the beginning of the conflict because of flight cancellations and also because of rising jet fuel shortages and prices. And so now this ceasefire comes as a huge relief, and we're seeing those names move much higher in pre-market trading. And finally, there is a lot of broad-based optimism across equities, and another sector that's benefiting is the chip stocks. They had been struggling as well since the beginning of the war because of concerns about higher energy costs and higher yields. And today this also comes as a big relief, and therefore we are in the green as well for those chip sectors.
All right, Chloe, thanks very much. We'll get back to you a little bit later on. Coming up also in this hour, Tina Fordham is going to join us of Fordham Global Foresight with a closer look at the ceasefire deal, plus its implications on global growth with Lucy Baldwin of Citi. Let's talk about that U.S.-Iranian agreement to stop the fighting just hours before Trump's genocidal deadline. The president made an announcement on social media cautioning the pause is contingent on the reopening of the Strait of Hormuz. Iran's foreign minister said safe passage through the waterway will be possible during that time, and vows that Iran will cease defensive operations if attacks are paused. Let's get to our team coverage with Bloomberg's Jumana Bersetchi and Washington Deputy Bureau Chief Laura Davidson. Jumana, first to you, what do we know about the 10-point plan that the Iranians put forward? President Trump apparently said that was a good basis point for negotiations. What do the Iranians want?
Yeah, well, I mean, that's a very pertinent question because we're heading into what will be 2 weeks of intense negotiations, we imagine, over the coming days. And the starting point for that are some of the very maximalist demands that Iran have laid out. That 10-point proposal, now, President Trump has described it as being a workable starting point, but some of the demands are indeed quite maximalist, and I would say non-starter for many in the region, including the right to sovereignty still over the passage of vessels through the Strait of Hormuz, a full cessation of hostilities, assurances that the U.S. will not strike again. They would like to maintain the series of proxies that they have in the region, the so-called axis of resistance, and indeed they've actually linked the ceasefire in Iran to ongoing operations in Lebanon as well, something which the Israeli Prime Minister has come back and said they would not accept on their part. And then beyond that, they're also asking for war reparations as well. So a broad list of demands coming through from Iran, very maximalist, unlikely that the U.S. would actually concede to those demands, but a starting point for discussions. And indeed, I will tell you, we are in a very different place than where we were about 12 hours ago when there was a real fear that this could perhaps escalate out of control. Today, the region is breathing a sigh of relief, but it is very tenuous, and we've got to see what the next couple of days brings.
All right, so far from the unconditional surrender that President Trump demanded at the outset of this war, yesterday he threatened the death of an entire civilization. Laura, how does the president spin this as a victory?
So this is a standard Trump playbook of, despite what the actual facts may say, or if a deal has really been achieved here, he's gone out and declared victory. I'll note that, as Jumana said, this is a very tenuous agreement. It is just 14 days. It is not at all clear yet if each side is able to turn this into some sort of more durable peace deal. Right now we have, based on the statements coming out from both sides, both the U.S. and Iranian sort of statements indicate they're seeing this and hearing what they want to hear from each other. For example, Trump has said that the U.S. military is going to help escort ships through the Strait of Hormuz. The Iranian side has said that their military will also be involved in that. So there's a lot of discrepancy here about exactly how this 14-day, these top-line agreements are implemented, much less, something more lasting, regarding Iranian's nuclear program, its ballistic missile arsenal, for example. But it's clear that Trump was under a lot of pressure at home. He had, people who had been allies, folks like Tucker Carlson, Republican senators in Congress who were really criticizing his statements and rhetoric from a day or two ago, suggesting he was going to return Iran to the Stone Ages. That really all proved to be too much, coupled with the economic pressure that voters are feeling and really warning signs ahead of the midterms. That all culminated into what we saw transpire just about 12 hours ago.
Jumana, the president has repeatedly claimed that the U.S. military has achieved complete and total regime change, even though it seems like the IRGC is still in charge of the same theocratic regime. Do we know who's negotiating on behalf of Iran?
Well, you raise a very important point, which is, and what some people say quite flippantly is there's been a replacement of one Khamenei with another Khamenei, obviously his son, the son of the former supreme leader. But ultimately, just stepping away from that, there doesn't appear to be at least visible signs of regime disintegration. And we know that the hardliners from the Revolutionary Guard, the IRGC, the clerics have been calling the shots here. They've been very vocal, obviously, on social media. A lot of this war has played out in social media. Now, Iranian state media reported a couple of hours ago that into these potential in-person discussions in Islamabad, they may be sending the Speaker of the House, that is Mohammad Ghalibaf. He has been one of the most vocal and strident voices. If you look at everything he's posted over the course of the last couple of weeks, nothing would have suggested that they would actually come to the table and start these negotiations. And I think a lot of that can be credited to Pakistan, who played a key role in mediation here, and also to China as well, something which President Trump has referenced himself, the role that China played in also bringing Iran to the table. But to go back to what we were saying here, Iran has identified that they have a new leverage point, and this is a point that did not exist a couple of weeks ago in the Strait of Hormuz. So in addition to the demands that they were looking to negotiate even before the war even started, there's now an additional point of leverage. That is the Strait of Hormuz. So if the U.S. say that they've managed to regain full and free shipping through the Strait of Hormuz but not deal with the other issues, then we're sort of back to square zero again.
Free being an important word there, considering the fact that the Iranians seem to want to charge a toll on ships passing through the strait that they also seem now to control. Jumana Bersetchi and Laura Davison, thanks very much for joining us. We'll talk to you, I'm sure, a lot throughout the day. We really appreciate your hard work. Oil plunging below $100 a barrel. WTI posting its biggest drop since the pandemic, and U.S. natural gas futures the lowest since August. Let's bring in Bloomberg energy reporter Anthony DePaola in Dubai. And Anthony, it's been pointed out a few times already last night and this morning that there's really an asymmetric set of probabilities here. I mean, it would be really difficult to get oil back down below 80. Surely impossible to get back below 60 where it had been at the beginning of the year for NYMEX. But anything goes wrong and it instantly jumps back above $100. Do you see it that way as well?
Well, we're certainly in a risky period here. So the market is taking a deep sigh of relief. As Jumana had just mentioned, the region is reacting to the fact that we haven't seen an escalation of the war here in this region, and that impacts oil markets as well too, because there was a threat against a lot of infrastructure. So that's why we're seeing this big sigh of relief in the market. But we are clearly not out of the woods yet. There remains a lot of oil stuck inside the Persian Gulf, both crude oil as well as refined products, and that needs to clear. With the uncertainty around the terms of how open the Strait of Hormuz will be, if that's going to be open with only the permission of Iran, whether there's going to be some payments involved there, that is still very unclear. And those tankers inside the Gulf need to clear first before we can get oil flowing back to the market. Then we would have to see, once that safe passage is proven, tankers that are willing to come into the Gulf and pick up crude oil, at which point some of those producers inside the Gulf could resume loading new barrels of crude, newly produced oil, because a lot of those producers were forced to shut down because they couldn't export the oil. Storage tanks became full and they had to shut in production. So we really need to see the flow begin before we can see that oil production ramp up. And shippers, producers, buyers are really asking for certainty before they move into that process of normalizing. So we're not going to see the prices coming down until we do see that. So we are still in this, and we've still got some ways to go before we can see some normalization and those prices falling, as you mentioned before, Matt.
Anthony, many of us are tourists in this market and have been learning a heck of a lot over the last couple of months. Dated Brent, which is apparently the barrels of oil for almost immediate delivery, hit an all-time record yesterday, since record keeping began in the 80s. And of course, we've all been hearing about how much jet fuel is costing the carriers. How are these other barrels or distillates being priced right now?
Yeah, so the Gulf is a big exporter of middle distillates. That's diesel, which goes into trucks, so highly important fuel for all kinds of transport, as well as the jet fuel, which they ship a lot of that, had been shipping a lot of that to Europe. So the Gulf is really important, particularly for the European supply of those middle distillates, whereas the crude oil is going, lots of that is going mainly to Asia, as well as smaller amounts coming to Europe. So it's a really key market for that. And so we have seen the products really increasing because they've been blocked in. You mentioned the dated Brent price. So another thing is price discovery here. When the benchmarks that set Gulf oil are pretty much trapped inside the Gulf, traders don't really have the benchmarks on which to price the crude. So we've seen oil that loads outside of the Gulf, that's the Omani crude, those prices have been skyrocketing, whereas Dubai crude, which is it's a very small flow in terms of barrels, but the price is set based on a lot of other crudes in the Gulf that come out, and those have not been moving. So traders are really scratching their heads on how do we price these things, what is the benchmark, and then that has led to some real dislocations, particularly on things like those products which haven't been able to get to the market, and that's been exacerbating the issue of the crude that hasn't been able to get to the market and get into the refineries to make those fuels. So we've really seen that back up, particularly on those middle distillates, diesel and jet, as you said, Matt.
All right, Anthony, really appreciate your coverage. Anthony DePaula there covering the oil markets for us. Coming up, more implications of the ceasefire deal with Tina Fordham of Fordham Global Foresight out of London next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller. Jennifer Kavanaugh of the libertarian think tank Defense Priorities weighing in on the latest ceasefire deal between Washington and Tehran, saying that it's a relief President Trump took an off-ramp, and I think almost everyone would agree with her there. But she said if he was going to back down, he did so in the worst way, raising the stakes so high beforehand, he maximized the damage to his credibility and global perceptions of U.S. power. This is a clear strategic defeat for the U.S. Let's ask Tina Fordham, founder and geopolitical strategist at Fordham Global Foresight, how she sees it. And Tina, I think you'd agree it's a tremendous relief that we didn't decide to bomb Iran back to the Stone Ages and kill millions of people. But how do you think it looks the way we went about it?
Well, you know, I was just talking to some clients here in Europe, some of our corporate clients about how it looks. And of course, there's relief. And yet, you know, the idea of thinking the unthinkable of an American president threatening to, you know, mass murder, in effect, on a country of 92 million people and then scaling back from it, it leaves scars. And I think that has to be understood. And one of the things that my client said is the unpredictability of the U.S. is forcing them to reconsider their plans, because I think everybody understands that this ceasefire, you know, buys time for 2 weeks. The proof is in the pudding in terms of whether, you know, whether ships will actually traverse the Strait of Hormuz, and insurers will be willing to put that cargo and those sailors at risk. And then there are the implications of Iran effectively coming out of this in a stronger position than they started.
I wonder why the president continues to restate that we've achieved complete and total regime change when it looks like the same people are in charge, albeit you know, the sun rather than the Ayatollah. But the IRGC and this theocratic regime that everyone has had such problems with for past 47 years remains unchanged. How do you see that?
I see it as a consequence of a policy that really painted the White House into a corner. Whether it's because the Israelis oversold the prospects of regime change or some other, element of White House policymaking, and the fact that the war aims of this operation